Let me ask you something. When you were a teenager, did anyone sit you down and teach you how money actually works? Did anyone explain to you the difference between earning money and building wealth? For most of us, the answer is no. And that one gap in our education costs us years, sometimes decades, of financial progress. Today I want to change that. I want to walk you through exactly how I would approach becoming a millionaire starting from zero in my 20s, right here in the United States, with no inheritance, no trust fund, and no lucky breaks. Just strategy, consistency, and the right mindset. Before we get into it, I want you to understand something. Becoming a millionaire in your 20s is not some fantasy reserved for tech geniuses or people born into the right family. It is a realistic goal for anyone who understands a few key principles and is willing to act on them early enough. The advantage you have in your 20s is not money, it is time. And time, when used correctly through smart investing and wealth building, is the most powerful financial tool in existence. So, let us get into it. The first thing I would focus on, before anything else, is developing the skill of selling. I know that might not sound exciting. Most people hear the word sales and they think of pushy car dealers or cold calls nobody wants to receive. But that is not what I mean. What I mean is developing the ability to communicate value, to look at something, understand what makes it useful or desirable, and explain that to another person in a way that makes them want to take action. That skill is worth more than any degree you could ever earn. Think about it this way. Every successful business in the United States depends on sales. Every product, every service, every idea that has ever made money had to be sold to someone at some point. The people who can sell are the people who control their own income. When you are good at selling, you are never really unemployed. You can always find a way to generate money because you understand how value exchange works. I would start building this skill as early as possible. Sell things you no longer need on platforms like eBay, Facebook Marketplace, or Craigslist. Go to garage sales, buy items for cheap, and resell them online for a profit. Offer a service in your neighborhood, whether that is cutting grass, cleaning cars, or helping people with something you are already good at. The money you make at this stage is not the point. The experience is the point. You are training yourself to think like someone who creates value rather than someone who simply waits to be paid. And here is something nobody tells you about developing sales skills early. You also build confidence. Real confidence. Not the fake kind that comes from telling yourself positive affirmations in the mirror, but the kind that comes from actually going out into the world, offering something, getting rejected sometimes, and learning to keep going anyway. That confidence will carry you through every challenge you face on the road to building wealth and becoming a millionaire. Now, let us talk about the trap that catches most people and keeps them stuck for the majority of their working lives, the 9-to-5 trap. And look, I am not saying there is anything wrong with having a job. Jobs pay bills, jobs provide stability. But a job alone will never make you a millionaire, and here is the reason why. When you work a traditional job, you are essentially selling your time. You show up, you put in hours, and you get paid for those hours. The problem is that time is finite. There are only so many hours in a day, and there is a ceiling on how much any employer is willing to pay for them. No matter how good you are at your job, no matter how many raises you earn or promotions you receive, your income is always going to be limited by that basic equation of time equals money. And when you stop working, the money stops too. That is the fundamental problem with relying entirely on a job as your financial plan in America. The moment I realized that my time was being traded for a fixed amount, I started asking a different question. Instead of asking how can I earn more per hour, I started asking how can I earn money without trading hours for it. That question is what separates people who build wealth and become millionaires from people who simply earn a living. Now, here's the thing. I am not telling you to quit your job tomorrow. That would be reckless. What I am telling you is that your job should be a foundation, not a destination. Use your job to cover your basic expenses while you build something on the side. And more importantly, use the income from your job to start investing in the American markets as early as possible. This brings me to the most powerful wealth-building tool available to everyday Americans, the stock market. Specifically, investing in low-cost index funds through a brokerage account or a tax-advantaged retirement account. In the United States, you have access to some of the best investment vehicles in the world. A Roth IRA, for example, lets you invest money that has already been taxed, and every dollar of growth inside that account is completely tax-free when you withdraw it in retirement. That is an enormous advantage. A 401k through your employer, especially if your employer matches your contributions, is essentially free money that most Americans leave on the table by not participating. Here is how powerful early investing is. If you invest just $400 a month starting at age 22 into a simple index fund that tracks the S&P 500, which has historically returned around 10% per year on average, you will have over $2 million by the time you reach 60. $2 million from $400 a month. That is not a trick. That is compound interest, and it is the closest thing to a guaranteed path to becoming a millionaire that exists in this country. The S&P 500 is made up of the 500 largest publicly traded companies in the United States. When you invest in an index fund that tracks it, you are essentially buying a tiny piece of every major American company, from Apple and Microsoft to Amazon and Johnson & Johnson. These companies grow over time, the economy grows over time, and your investment grows with it. Side hustles also play a huge role in accelerating your path to becoming a millionaire. When I think about the most valuable side hustles for someone starting from zero in the United States, I think about ones that either build a skill, build an asset, or build a network. Flipping items on platforms like eBay or Amazon teaches you about markets and buying low and selling high. Freelancing on platforms like Upwork or Fiverr builds a marketable skill while paying you at the same time. Content creation on YouTube or TikTok builds an audience which is itself an asset that can generate income for years through advertising revenue and brand deals. The goal of your side hustle in the early stages is not to replace your income overnight. The goal is to build a financial cushion, an emergency fund large enough that you are never in a position of desperation. Because here is what desperation does to your financial life. It forces you to make short-term decisions that hurt you in the long run. When you are desperate, you take any job offer even if it underpays you. You make impulsive purchases because you are stressed. You avoid taking calculated risks because you cannot afford to fail. A financial cushion changes all of that. It gives you options. And options are what wealthy people actually have that broke people do not. I would aim to build at least 3 to 6 months of living expenses saved before I started making any aggressive investment moves. Once that cushion exists, you can start taking smarter risks because failure no longer means disaster. Now, let us talk about the concept that truly changed the way I think about money and the path to becoming a millionaire. Passive income through investment. I remember the first time I really understood what passive income meant. Not just heard the words, but actually understood the concept at a deep level. It was like a light switched on in my brain. The idea that money could work for you while you sleep, while you eat, while you spend time with people you love, while you do literally anything else. That idea is the foundation of every significant fortune ever built in America. Active income is what most people focus on. You work, you get paid. Stop working, stop getting paid. Investment income is different. You put money into assets once, and it continues generating returns without requiring your constant attention. The wealthy do not just earn more than everyone else. They earn differently. Their money is structured in a way that multiplies over time rather than staying flat. Let me give you some specific ways I would build investment income starting from zero in the United States. The first is through a brokerage account with a platform like Fidelity, Vanguard, or Charles Schwab. These platforms charge little to no fees and give you access to index funds and dividend-paying stocks. Dividend stocks are shares in companies that pay you a portion of their profits on a regular schedule, usually every quarter. Companies like Coca-Cola, Procter & Gamble, and Johnson & Johnson have paid and increased their dividends for decades. When you own enough of these shares, those quarterly payments start to add up to real money without you lifting a finger. The second investment vehicle every American should understand is real estate. Now I know what you are thinking. Real estate requires a lot of money to get started. And yes, buying a property outright does. But there are ways to get exposure to real estate with very little money through something called a real estate investment trust, or REIT. A REIT is essentially a company that owns income-producing real estate, like apartment buildings, shopping centers, and office spaces, and it is required by law to distribute at least 90% of its taxable income to shareholders as dividends. You can buy shares of a REIT on the stock market just like you would buy any other stock. This means you can start investing in real estate with as little as a few dollars and receive regular income from it. For those who do want to eventually buy physical real estate, the house hacking strategy is one of the most powerful wealth-building moves available to young Americans. You buy a small multi-unit property, live in one unit, and rent out the others. The rental income from your tenants covers your mortgage payment, which means you are essentially living for free, while your tenants pay down your mortgage and the property appreciates in value. Over time, this builds enormous equity that you can use to buy your next property and repeat the process. The third investment path is through tax-advantaged accounts. Beyond the Roth IRA and 401k I mentioned earlier, Americans also have access to health savings accounts, or HSAs, which are often called the triple tax advantage account, because contributions are tax-deductible, growth is tax-free, and withdrawals for medical expenses are also tax-free. Maxing out your HSA, your Roth IRA, and your 401k before investing in a regular brokerage account is the smartest sequence for most Americans who want to become millionaires through investing. The fourth and most powerful long-term investment is simply this: starting early and staying consistent. Time in the market beats timing the market. This is one of the most proven principles in all of investing. The people who try to predict when the market will go up or down almost always underperform the people who simply invest consistently every single month and never touch their money. Dollar cost averaging, which means investing a fixed amount on a regular schedule regardless of what the market is doing, removes emotion from the equation and takes advantage of market dips automatically. Now, I want to be real with you for a moment, because building wealth and becoming a millionaire is not all strategy and motivation. There are real obstacles, real setbacks, real moments where things go wrong, and I think it is important to talk about those because if you are not prepared for them, they can knock you completely off course. One of the most important lessons I learned early on is to protect your plans and your financial goals. When you are building something new, when you have an investment strategy or a business concept that you believe in, be very careful about who you share it with. Not because everyone around you is malicious, most people are not, but ideas at the early stage are fragile. They can be dismissed in a way that kills your motivation before you even get started. And sometimes the people closest to you, out of love or concern, will talk you out of the very thing that could change your life. Build in silence. Execute loudly. Let your results do the talking. This is not about being secretive or paranoid. It is about protecting your vision long enough to give it a real chance of working. Another obstacle you need to be prepared for is market volatility. If you are going to invest in the American stock market, and you absolutely should, you need to be mentally prepared for the fact that the market will go down sometimes. It will have bad months. It will have bad years. In 2008, the market dropped nearly 50%. In early 2020, it dropped 30% in just a few weeks. Both times, it recovered and went on to reach new all-time highs. The investors who panicked and sold during those downturns locked in their losses. The investors who stayed the course and kept buying actually came out ahead because they were buying at lower prices. Your greatest enemy as an investor is not the stock market. It is your own emotions. Fear and greed are the two forces that cause most investors to buy high and sell low, which is the exact opposite of what you want to do. Developing emotional discipline around your investments is just as important as choosing the right ones. Let me also talk about money management, because this piece often gets overlooked. You can have the best investment strategy in the world, but if you do not manage your cash flow well, you will never have enough money to invest in the first place. The basic principle is simple. Spend less than you earn and invest the difference. That is it. That is the entire secret of personal finance. But simple does not mean easy, especially when you are surrounded by a culture that constantly encourages you to spend money on things that make you look successful, rather than things that actually build success. I would live below my means aggressively in my 20s, not because I want to deprive myself, but because I understand that every dollar I invest now is worth significantly more in the future. That is the power of compound interest. Money invested early has decades to grow. Money spent on things you do not need is gone forever. I would also be very intentional about what I call lifestyle inflation. This is the tendency to increase your spending every time your income increases. You get a raise, so you get a nicer apartment. You earn more from your side hustle, so you buy a more expensive car. Before you know it, your expenses have risen to match your income, and you are no closer to becoming a millionaire than you were before. The people who build real wealth are the ones who resist this tendency and continue to live modestly even as their income grows, channeling the difference into investments and assets. Now let us bring this all together. If I were starting from zero in my 20s in the United States today, here is exactly what I would do. First, I would develop a valuable skill as quickly as possible, something that people will pay for. Sales, coding, design, writing, marketing, whatever aligns with my interests and the market demand. Second, I would get a job or some source of stable income to cover my basic expenses. Third, I would start a side hustle immediately, something that builds a skill or generates extra income on top of my regular earnings. Fourth, I would build an emergency fund of at least 3 to 6 months of expenses before making any aggressive financial moves. Fifth, I would open a Roth IRA and a 401k immediately and begin contributing to both, starting with at least enough to get my full employer match on the 401k. Sixth, I would open a brokerage account with Fidelity or Vanguard and begin investing in a low-cost S&P 500 index fund every single month without exception. Seventh, I would educate myself on real estate investing and work toward my first house hacking property as soon as I had enough saved for a down payment. And eighth, I would protect my mental and emotional energy by surrounding myself with people who support my vision, and by never making emotional decisions about my investments, no matter what the market was doing. None of this is overnight. None of this is a get-rich-quick scheme. This is a genuine roadmap for becoming a millionaire through smart, consistent investing over the course of a decade or less. The people who follow a plan like this consistently in their 20s almost always arrive at financial freedom by their 30s or early 40s. The people who do not often spend their entire lives wondering why money always feels so tight. The choice really is that simple, even if the execution takes discipline. If you are watching this and feeling inspired, I want you to do one thing right now. Just one. Pick one item from that list and take one action toward it today. Not tomorrow. Today. Open that Roth IRA. Download that brokerage app. Research that index fund. Because the difference between the people who become millionaires and the people who only dream about it comes down to one thing. Thank you for watching. If this added value to your life, please like this video and subscribe because I put out content like this regularly. And drop a comment below and tell me where you were starting from and what your first investment step is going to be.